what we see with the stablecoin bill. But it would seem that they're using this as a mechanism to engineer a new digital dollar and the demand for that digital dollar as well. So this is about replacing the infrastructure piece by piece with a new monetary framework that is built around the tokenization of assets. So how this is going to play out as far as the Stablecoin Genius Act bill, there are people out here that say that's when we got our new monetary system again, and it's just nobody noticed it.
I just see them at the top level and see it as the advancement of the agenda that I've already assumed is coming. And that is tokenization of your assets. Eventually, I don't expect gold holders will just be able to self-vault or self-custody their own gold. They will say, you all need to be with a registered vaulting service and it must be updated on blockchain. They want all wealth, anything they consider of value, and many things that don't even consider of value. You've got to remember, tokenization is the insertion of a derivative proxy over your physical right of ownership on a physical item.
Hello, everyone. Welcome back. Today, we're joined by none other than Francis Hunt, the market sniper. Always a pleasure to speak with you, Francis. It's great to see you again.
Great to be back with you guys. Thanks for having me on.
Of course. It looks like we're in the middle of an equity market melt-up, you could say. They're just keeping everything inflated by all means necessary to not create any panic. At the same time, we're seeing this quiet pressure building in the metals market, even though we've been seeing pullbacks. So with everything going on, it still feels like we are indeed in a recession, and people will dress it up however they'd like. But the economic pain that we're seeing in the markets overall is still there. And finally, the credit markets are already flashing warning signs, and the banking sector as well, because they're extremely over leveraged. So overall, where is this going?
Great question, and a broad one as well. As you mentioned, debt markets is never a bad place to start, because it's we're talking foundational. Is the building fall over? Well, what's the foundations doing? You've had long ends that just creeping up, basically, on the UK. Now, that has tempered slightly in the last, if you're talking day, week, but generally, if we're talking this year, up until this half year that we're at, you've had the long ends going up. So there's a steepening of the curve. You might also remember from the yield curve inversion, which is a 100% indicator, that every major crisis, every yield curve inversion that reverts back positive, this is typical of what's happening. And the crisis comes with the steepening of the curve as it starts to accelerate back up. So I've got good reminder charts for that aspect as well to show you. I'll just jump on a few things while we're talking. So I'm looking at August, September, October, going into November as a few shoes dropping. We've referenced, to many people's annoyance sometimes, the fact that we feel there's a demand destroying event. Last year, August, we had a partial carry trade fear that occurred in August. Usually it was September, October, where things would sometimes kick off going into that. But more recently, it's come during the Northern Hemisphere still summer holidays vibe, while some traders might still be away from their desks for the big banks and the institutions. So let's just go back and do that yield curve inversion and reversion, and just remind everybody why the foundation is debt, and it is so important for understanding. And I'm going to kick off and share that, what happened every time before, and why I'm now saying we're here now. You know, we're reaching that moment. We truly are here. And let's show that to you as well. So I put up the yield curve. Hopefully that's showing now, if you can just confirm. And a lot of people have stopped talking about this because people get bored and they want to talk about new things. You know, a lot of people talking about pivots and everybody expecting Kramer throwing his toys because there's no rate cuts. I want to come back to that point. But you get a steepening, and we had a super big dip here on the yield curve reversion. It's one of the biggest of the modern era. That was the early 90s slump. You had Asian crisis, mini dips here. The post-dot-com that was already started to occur in 2000. The recession came in 2001. You had subprime. You had the early bells when you inverted in 05 already. You only came up out of it in 07, and then you had the Lehman's crisis, all once the yield curve was steepening. For those that are listening, and yield curves are a bit technocratic and a bit scary, and they're switching off because they don't understand. Debt markets are the underpinnings of your markets, and there is duration. You have short duration. You have 1 year, you can even have 6 months, and of course you get bills, which are like 3 months and 6 months, and then you have 10, 20, and 30 years. So when the rate that is being paid on the longer term debt is climbing steeper, that is very inflationary, but short term they're concerned about the economy that's being kept low. So that's a steepening curve when you compare short to long. And it's also one of the questions you were thinking of asking, and why they are financing everything on a shorter duration is because it's cheaper right now to do exactly that. If you wanted to put it out on a 30-year, the rates on the US 30 is pretty ugly, and I'll get that up, but we'll just finish on the yield curve reversion. So the crisis comes once you've reverted back positive and you're in a certain period and we're in that period, and we're coming into the season for crises. And actually, I'm a little bit lukewarm on gold, having been very bullish. I'm macro very bullish, but on the short, medium time frame, I've turned off the bull bias from a trading perspective. I'm always a stacker. I'm always an investor. Same for silver and platinum. But we put the community out about a week ago, and we've started talking about it publicly again, why it crashed. And we initially thought it was going to melt up, and then no, it got slammed. So we'll come back to gold, because when you talk about debt, there was a substitution. Here's the things that worried me. Every YouTube channel was talking about revaluation of gold to 20K or 15K. I was seeing Luke Groman, as I say, being sung to the high heavens. He kills it, explaining on Zero Hedge how debt markets are being substituted for gold. Now, that was our position since September 2020, and now it's a mainstream position. And now everybody is like gold to the moon, and a revaluation up, and it wouldn't even, some were saying it wouldn't even be inflationary. And I'm like, you revalue gold from 5 to 15, from 3 to 15, 5 exits basically. What do you think silver has to do in light of that? It's not going to stay down there. You're not going to have a gold silver ratio that instantly jumps to, we're at 90 now. It's not going to go to 5 times 90, 450 silver ratio. So that's not happening. Silver will start quickly revaluing. Platinum too. A lot of things, all of those things would happen, and it would be very inflationary. And in fact, revaluing gold is not so much a revaluation of gold. It's an admittance of an as yet not found, price discovery wise, debasement of dollar. So you're suddenly saying, we've been cheating, the dollar has been debasing, it should be up there. Bang. That's what you should, in terms of its value to gold, or in buying power down here, to however you want to rephrase it. So all those things started to become a little bit too many people on one side of the boat. So we should transition to precious metals. But before I do that, I should show you again something on the long term, which is the debt markets. And if we have a look at that, you can see what your cost would be. It would be at about 4.8% right now. We are seeing selling wicks here. So I think we are going to have a little bit of fear as well. So a lot of things are telling me the demand destroying event we've been talking about, everyone can come and tell me I was wrong and puke on my YouTube comments in January next year when it hasn't happened. But I think the end of this Q3 going into Q4, lots of things. You've got the Eurozone launching their e-CBDC October. We've now had the World Health Organization's draconian agreement signed off by just about all WEF-controlled nations, which is most of them. So you've got a space, you've got a, they're keeping so many memes alive. You've got the alien invasion that's being kept alive. We've spotted it. It's coming on a trajectory. It looks like it's planned. It must be intelligent life. They've got all the themes here that they can do to drop on us. And it wouldn't shock me that we're going to have something dropped on us coming. So the rate does look like it's going to come back down. We made an HVF target up top there. We've been churning, but that's like short term. Longer term, you're going higher on rates. It's a debt-based crash, but I'm just talking short, medium. I'm talking the rest of this year could be a little bit skittish. So that could be bearish for equities as well. Don't forget, for those that think it's a melt up, because they were the melt up guys, out there, that when you rebase this for Swiss francs, I've taken the NASDAQ, if you just divide that by Swiss franc, for example, USD, I've got to tell it USD. We've had real dollar debasement. So after debt debasement, you get dollar debasement. We've had that. So we're having nominal climbs on a lot of things. That's the wrong way around. Sorry, I need it the other way around. I'm going to have to do the other one. I don't think Oanda has it. I had made it worse, not better. Swiss franc, there you go. There's a broker that does it the other way around. So you can see that's not a new high. You haven't even retraced the collapse yet. That's a fiat. Do that on gold now. So the nominals, people are don't be fooled by a nominal cultist's trick. When you're actually getting an immense amount of liquidity pumped in the market. So again, it's fire and water. One end, they're putting out the fire, we're keeping rates high, putting the sand on the fire. The other end, they're pouring the petrol, they're pumping the liquidity, because they can't have an illiquid market on high rates. The problem is they should normally cut rates in what is a recessional vibe. That's where we are. And we've probably bounced in and out of recession a number of times. We've already met the criteria on their fake stats at least once. But so if given that the consumer is there, you've got record home listings all up, what's actually happening is the people that borrowed, retail, not those with special deals like Elon and anyone else that borrows, but retail are being squeezed out of the housing market. That's what BlackRock, Vanguard wants. They'll be there to buy them up and turn them into permanent rental farms. That's all going to plan. They can't pay, they can't sell, get their price. They would have a major negative equity if they sold lower down. That's all going to plan. High rates is doing its job, not for you, the retail guy, for the eventual buyer, blood in the street buyer of all the US homes right now. But they've also, because of the rates, that requires much bigger interest payments to who? To the banking cartel that were given the exorbitant privilege of borrowing your money into existence for you. So there's huge liquidity going to them. They are floating in interest payments being kept really high. And because of the liquidity pump, things are actually staying strong on the stock market, but at nominal levels. So let's just do that NASDAQ divided by gold, for example, as well, gold USD, and you do it. So you've seen the Swiss franc, which is a slightly less. That's your stock market. Well, you're actually in a crash. You're in a two-legged crash. You are rallying now, but your last high was some time ago. It's not the recent high. It's some time ago. So here's where you are, So in a different fiat, you saw a different thing. And this is with gold spilling its guts a little bit recently and the dollar getting a bit of its backbone back. But that's where you are. So many might say you've had your blow off high. This was when you were, okay, great, going for a high. So the market of July 21, before 22, that was actually gold's last top before it broke out. That's your NASDAQ high in gold adjusted terms. So you're actually in an ABC leg down so far, and who knows where that ends. It's currently 3 months up, but it won't always be that way. So yeah, nominal, be careful by the nominal trick. There's a lot of liquidity out there, and I think they might find a reason to switch it off or let certain things happen, events driven, yada, 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 over the next three months. And that spells to me that it could be a lot trickier time. So I just wanted to, I dealt with that equity because NASDAQ is probably the strongest of them all. Don't forget you're on the most extreme market cap to GDP reading ever. That's the Buffett, popularly known as the Buffett indicator. So it's complete smoke and mirrors right now. And
but that's the weird thing here. It's like there's so much tension, and on one side you have the illusion of strength, but underneath it's 100% a slow motion collapse, and it's being engineered on both sides. I just want to clarify that. And it's obvious that they're just trying to buy more time to set the stage for something bigger.
Yeah, I would agree with that. I think it is. That's how it would feel. If you look at the dollar, this is the debasement of the dollar. Every time you think how much the stock market is up, you know, it's fallen 12.72% to its low. And right now, even with now quite a strong last week in the bag, it's still 9.5% down on the 13th of January. So, you know, 6-7 months, that's a 10% fall. That's against other currencies, which include crap currencies like the euro, you know, the pound, and anything else. You know, so it's not. You're failing against a bunch of failures. It's not exactly how much the gold price is up this year, which I would say is a much better inflation matrix for readjustment. So that's kind of currencies. I'm trying to think what else was in your question. So gold, I was going to say I think gold's going to calm down its upside for a little bit. So it's worth just recapping, and I kind of did this on my own.
But you know, real quick, Francis, about the gold. The thing is, the pressure is there. You could see it, but they're obviously manipulating it. I mean, this is how freedom is kind of destroyed in a sense. I mean, the reality is the gold price should be significantly higher, but we're not getting anything like that. There's a lot of suppression here. It's crazy.
There is some price discovery that started to happen, and what I think is we're going to have a little bit of a rest. Follow this and see what I'm suggesting. If you look at from the low, this was a flag. This is a poll that I've got here. Let me just highlight it so it pops nicely for you. And this has been the continuation pattern that we called once, twice, 3 times a lady. There's your 3 time, and then this was your lady break. And then since then, you've been in this trend channel. You may recall we said 293,000 target. And what ended up happening is as you got to the 293,000 target, I'm going to drop that down into a lower time frame now, is we had a final little wind up here as we ran our 2.9 there. And that gave us another little HVF after this fella was getting us to target. So we said, okay, you're going to run 3,000, great. Then you had the beginning of what we typically call the progress decay. Now, what happened here? It's quite important to point out that literally the sprinter was done. He'd finished doing the 100-meter sprint. And I jokingly said today, and I'll say the same thing to you guys for the humor value of it, but essentially you've got Usain Bolt finishing the sprint. He's already backing off, and someone gives him a jab of morphine painkiller in his backside, and a line of cocaine up his nose, and he's encouraged to sprint a little bit further. Now, generally, that's not good for longevity. He's not going to turn into a great 800-meter or 1,500-meter running with that, but you'll get a spike reaction that will get you the next 30, 40 meters in a surge, because he's going to wow, and he's going to be high as a kite, and off he's going. So, and that's exactly like what
the financial system. That sounds like the financial system, but carry on.
Yeah, so that was the Trump tariff tantrum. So that was the point in April when he was threatening everybody and going full ball. And then what happened there, many forget, is that rates spiked. They haven't come fully down from that yet. And at the same time, the dollar crashed. And that was the fulfillment of a prediction we made. And there was a small version fulfillment, but it was a fulfillment when Truss and Kwarteng were thrown under the bus. We said this happens for America. Pound down, rates up, everyone dumping the bond. What you have is a vote of no confidence and faith in the country. And not only does the debt instrument get sold, but the currency gets sold and the money's taken offshore. That's happened there for the US and Trump found his point of, whoa boy, for all of that. And that's when Lutnick and Bessinger or all these other ear whisperers, insiders, would have said, back off right now on that one. That one doesn't work out well for us. So that's when gold got the biggest benefit from the collapse in the bonds and the dollar dumped. So you've also got to remember, buying gold is an anti-fiat, anti-dollar trade. You're taking fiat and you're saying, go away, and I'm holding that. I'm not trading. I'm not getting better. I'm actually taking and bringing under my control metal. And you're throwing fiat, surplus fiat into the room. That doesn't do it good for valuation. And that's what happened. So I think that was a little bit turbocharged and took it to, in a moment when we should have been sitting at our 3,029, it took it from, it even dipped into the 2.9s, it shot to 3.5. So we're going to call that a local high for a bit.
And that was because the pressure on the bond market after the Liberation Day, because nobody showed up at the Treasury auctions. And, later he just realized that, his buddies told him, hey, you got to change your tone real quick because yields are about to spike. They're going to get out of control and bond prices are crashing. So he instantly had to change his tone to reverse that. And then I think about 4 trillion came back into the market and kind of stabilized things. But and gold shot up, as you said.
That's right. And it took it a little bit further than it needed to go for that move, because it had already run pretty low vol pretty consistently all the way. In fact, if you start from here, not the 2K, you went from 1.8 to 3,000. That's a heck of a jog for something that was already a 20 plus. Well, it was kind of at least mid-teens market cap. It finished, deep in the 20s, the low 20s market cap, trillions.
So imagine the next bond scare, what it's going to do.
Yes, exactly. And they only can keep coming. And one of your questions was, why are they crowding out into the short term? Because it's cheaper. They can't afford the interest payments on the long term is number one. Two, everybody will say, yeah, but that's fine. Everybody buys T-bills, 3 months, 6 months, whatever. They'll always be fine. No, the fact that the long end got out of control for excessive issuance, how do you come to the conclusion it's okay to have infinite amount of debt in the short end? Because eventually there's too much available and not enough buyers too. There.
Exactly.
If you keep crowding everything out, we had a problem there. We couldn't eat all of that. Okay, put it here. That doesn't mean you're suddenly now able to eat 600 hot dogs every night. You can't do it because they keep saying, here's another hot dog. Have another hot dog with your pink crocs. Have another hot dog. And you're like, whoa. So in the short term means you got to eat them faster because they're coming around again a whole bunch quicker.
Yeah.
So that's a bit like you saying, I can't afford my mortgage, and the mortgage rates, let's pretend the mortgage rates were higher than you get on your credit card. But you start rolling all your houses. You had 10 Airbnbs that you only put 0% down on, and you were letting them, and it was free income, and you were skimming the difference between the interest payments. Now you don't have, the rates are too high. You settle your mortgage with 20 credit card rotation bills, and you put it all on there, and they require you to pay at the end of every month, for example.
Instead of longer term.
It's like that doesn't go well. Just because the credit card will be marginally cheaper, what happens is you deal with a problem 1 month, you've got it all to do again in another month's time. And you've got 20 cards to do it on now because it doesn't have the same credit depth as the long term would have had. So, they're going to, it's a debt-based collapse, as we always say.
Slow motion.
Yeah, exactly. And you saw that. You mentioned the bad auction as well, which was a good observation. Many missed that. So this sell-off was a bit harsh. So I think in the demand-destroying event, what they really want to do is they need a thin market with everybody selling everything they've got. They need to create a crisis where we're all short of money again, and we're maybe not earning, or et cetera, et cetera, et cetera. And in that environment, they can sell down. There were lease rates going really high on platinum and silver. They can sell that down, and the bankers get out of their shorts. People forget that they crashed the silver price, I think, to $11 or $14 in CV19. So if there's real stress with short positions there and the lease rate spiking and all of that, people going, whoa, we've got a real problem there. We're not too far from the unpacking of some of their fresh new Kraken surprises that they've got for us. So we could actually have a correction. There's a couple of ways this resolves. It's not, we're not saying absolutely it would, but you can sometimes have a second impulse that goes a bit like this. It takes a while to happen and eventually makes a low, and we'll be back on our normal HVF setup. If it starts to climb slowly back, I would actually prefer gold to hammer out a rounded bottom and keep going down, but lower vol, calmer, rounded bottom. If it does a grindy, slow flag like that, I'm going to be I'll short it. Even as a trader, I'll short it. I'll put the profits to buying new bullion cheaper down.
That's what I've been doing. I bought 2 ounces of gold yesterday, the minute it kind of dropped, and I have some dry powder to pick up some more at those lower prices.
And the trading market might give it to you. I don't want to see it grind sideways really like that, because that tells me demand destroying event, downside, because there's no reason to sell gold. It'll be the retail that'll sell. Trust me, the central banks won't be selling all that.
They're buying the gold right now.
They are net accumulated. So they'll buy on the fear of everybody else having to get out.
Speaking of corrections, I'm sorry, Francis, go ahead.
Yeah, no, I'm talking a lot. Go ahead.
Yeah, I had a quick question. What's interesting is I notice in 2022, 2023, and 2024, Q3 actually brought some slight turbulence and pullback within Bitcoin or the markets. So speaking of your anticipation of a destructive event or correction, we're talking Q3, correct? So it seems like there's some sort of pattern.
Beginning Q4, yeah, because we kind of, it's September, October, it sort of bridges the two,
Yeah, definitely. Very interesting. It's almost like it's by design.
It is.
I mean, because there's a clear pattern here since 2022, 2023, 2024. And if it remarkably happens this year, which is, it seems like it really could play out like that, that's what your analysis is telling you, then certainly I think there would be some sort of, and what do you think? Some V-shaped recovery to take us to that next, I guess you could say, leg up.
I remember a video we did that went very strongly viral, and I said, remember, they don't want you to make the money on crypto. They need to go out of those positions before they pump it. They have to hollow you out. There's this opportunity they can't stop most people from potentially participating. They are shrinking down the traditional financial services, this debt-based collapse. They are busy getting all the Bitcoin maxis to do copycat strategy companies where they'll all go get leverage, support the USDT treasury buying, get into Tether, buy Bitcoin. So they're all going to do the copycat. They're going to be the liquidity for the OGs, NSA, CIA guys getting out. That's right. In this situation. It's the worst, the handover. Why would you be patient from 2011 and 2010, all those years, but decide now's a good time?
Right.
On something that's so you've got to start thinking a little bit nuanced. So these guys will show up and be the leverage buyers, wannabe micro strategies, Mark 2, 3, and all of them. Shiny young faces, no clue how the world works.
Jack Mallers, you've seen Jack Mallers.
That's who I'm talking about. And others like him, they'll go get borrowed to the hilt and they'll just go buy, and then they'll crash. They can crash the market for a mid-correction. And actually, the biggest part of the move, this is why I warned about the gold-silver ratio as well to many of the precious metals guys, is that if they have that demand-destroying event, everything gets sold. And that's where gold's feature is that it goes down small relative to silver and relative to Bitcoin and relative to your favorite shitcoin, which goes 90% down. So one of the ways they flush everybody out is they create another version of lockdown pandemic Mark 2, space aliens. We've all got to give up our resources and fly F-16s against intergalactic craft, whatever FUBAR nonsense they throw at us, which we know will largely be a lie and a deception. They will crash everything immensely. And that might be a time where America might get a bunch of borrowing out on the more medium time frame and get a bit of relief of putting it all on the short term, because you might get the long terms that I'm pointing to could come down a bit before eventually breaking out upside. So they've been at the top and they've been kept down. They probably need a down leg. And at the same time, gold gets a bit of a mini down leg. As I said, it didn't even do 4% down on the carry trade. I think this one's a bit bigger. And then they force everyone out of crypto. So the retailers will be selling out at the bottom, and then they can super inflate it on the solution. They don't want you to get rich on it. They have to inflate this thing, but they don't want you riding the conveyor belt up into the wealth there. So what do? If a guy can't pay his rent check or can't buy food, sorry, the XRP wallet's been emptied out. That's why I say have cash, have a holistic solution on you, have notes, have food, have long life food, be close to your farmer, be rural. Whatever comes, it's never good to be urban in a high-rise environment relying on the supermarket chain. Let me just leave it there. So that's something to think about, and that could be coming. And that's quite a big bear shout. And we haven't called bear on the stock market. We haven't called bear on gold. We just made a great target and made even overperformed with the Trump tariff tantrum. But as I'm saying, that was a little bit of he needs a hangover now after that shot in the bum that he got. And that could be a good point for a bit of respite. Remember, they don't want that. You made halfway between 3 and 4K at that localized high that we're now calling. So you went from 2,000 to 3.5. We need to give something back, and they don't want it going to 4K just yet, which is what we were talking about when we thought it was going to break up. But I don't think in hindsight, with everyone also on the gold trade, that's going to happen. Same for the miners. You'll watch the share registry change. A lot of people that got in early on the miners haven't really had the gold run, and they're going to get flushed out. You have to sell your shares if you have to pay rent, you have to buy food, all these things. So that's when BlackRock, Vanguard, State Street, and other nefarious actors will be buying up houses, gold equities, and shaking out people in the key cryptos, which you and I both know XRP is going to probably be a major.
Yeah, we're gonna shift into there. But to your point, and I'll let my brother go ahead and speak.
Go ahead.
They're inflating these bubbles as they're transitioning us into the new rails, and as long as they can continue to suppress and play around with the volatility, that's going to keep people distracted and cheering on the markets with paper gains, and then nobody's asking the right questions like you are.
Yeah. And so everything markets always nominalized. The dollar's been a train smash. And do it with gold ideally, but if you want to do it with another fiat, use the Swiss franc. And you're not even at a high. You haven't retrieved the last high before the crash, the tariff tantrum crash. So dollar is being toast this year.
So my quick question, just to clarify what you said regarding this destructive phase or correction, just to clarify for the audience, if I'm understanding correctly, you believe that there will be some sort of correction before the next leg up. Is that correct? Is that what you're trying to say? Because we have more to go. I mean, the business cycle is still below 50. Rate cuts haven't happened. The dollar historically bottoms out, and that's usually the top of Bitcoin. Excessive money printing is coming. So
yeah, there's mixed signals on that. I think it's a higher probability than people are pricing. I'm not promising everybody that I absolutely think that, and it's my primary scenario. I think it's a much higher probability than most people are pricing in. I don't think anyone's pricing in meaningfully. They might at 5% or 10%. I think it's a lot higher. I'll show you the total.
And then they'll get the next leg up, basically. So this would be a shakeout, like we've spoken about, and you mentioned previously in our old discussions.
But it's interesting. It's interesting why there would be a correction to both of your points is because if you notice how the banks have been incentivizing people to take on more leverage, interesting. They would incentivize you to take on more leverage so they can go ahead and shake you out your profits. And then they can have the leg up, hollow you out.
100%. And then
I think that makes more sense.
The deals for it. I think it's pretty high probability. I mean, on the one hand, I'm looking at the total here, crypto total, and saying, could this be a structure for a final push that you get a good July and a first half of August, And then this is the last one. I want to show you the bigger time frame, the total market cap, which includes all of them. Whoops, that's a bit too much. Let's go weekly. We had a structured draw and setup. Did I? Sorry, I'm going to try to recall which one was it. It might have been total 3 or the full total. I'm on total 2 at the moment. Sorry, while I sort my feet out.
Sorry.
Let me just check which one it was. It might have been the full total, which includes Bitcoin. We kind of had a setup that we were interested in. Let's do it on daily. That's it. That's the draw we had. So we've got a higher trillion market cap. We think it goes to 5.25. That's everything in it. So there is a potential draw here. So that's this that we're showing you here, and that pullback, very low vol, broken out, but you're at what we call our second interim. So this is on a daily time frame.
Oh, that's the market cap of crypto.
Total,
right?
includes Bitcoin, correct. Includes Bitcoin. And what we're now seeing is you're getting a squeeze here. So one of two things happens. You're going to go for a little pop further, and then something could happen and we revisit, and we often come right the way back to funnels in crypto because it's so buoyant. And then later you do that. But it's this part that I'm worried about for everybody.
So the next the next stage right now, before the next leg up.
Yes, so we're at a pause point. So if I leave the daily now, if you can try a snapshot and remember that on your daily time frame and clear up my mess there, and then take you back into a lower time frame, I think you could still get one more squeeze up on crypto. I'm seeing gold clearly is already, gold leads, remember?
Yes.
Gold started the move. We made a big point of saying once, twice, 3 times a lady for gold, and then said the same for Bitcoin, and it followed. And we said it's going to do the same, and Bitcoin did follow very clearly after that. So you could get this fella to pop and run, and everybody would think, what's he talking about? Everything's la-di-da, it's all great, and and who knows, maybe Bitcoin does 125 or 150 by the time we're at 4 trillion. It depends. But we certainly have called initially that the dominance is probably turning. But just as you think that's the case, you could get one more dip down like that in the dominance, and that would be also potentially on bearish. But initially, I think we creep higher. We break out of this. This is the inverted, by the way. I confuse everybody. I should highlight this. We're looking at we're jumping around, and I'm not explaining inversion. So I've inverted the Bitcoin dominance, and we're on the weekly chart. So when you go up, that's reducing Bitcoin dominance. That's alt bull market. So we've had a strong candle up on there, and we're the guys that have said long run you're going back into the 40s on dominance, which is down on the normal way around. And we think this turns into one day a massive setup like this, and Bitcoin's dominance will be a lot less. Maybe it ceases to exist. Who knows? Any smorgasbord of possibilities. But we think you're going to break out of that. So you might go higher and break this falling wedge here that we've drawn.
Just to build,
that little total setup. But then you have a revisit, as you often do, on whatever crisis they unpack.
Yeah,
and it would be met with a response, a policy response. So they could also buy cheap, refinance the debt, potentially trillions that are due, basically put themselves in a better situation and shake out people simultaneously.
100%.
Before the next leg up.
They knock all the pieces over the chessboard, and while everyone's looking under the table, picking up the pieces, they just quickly move everything a little bit better for them, so that by the time you resume the situation, once again, they're in pound seats, even though the game wasn't going their way. And that'll serve, they always serve multiple purposes when they do that. So, they had the sphere on the lease rates and silver. You might have a lot of banks getting out of their short positions into people, forced sellers, traders that are net long, maybe still silver, or people that are forced to actually sell physical silver just to get by. So they might hold our head under the water a little longer with this waterboarding, and I'm not happy to say that. It doesn't feel like good news, but that might happen. They need everyone to be properly shaken. out of their positions. Remember, their goal is globalized Marxism, communism, complete restriction, totalitarianism. They use a combination of their corporate fascism, BlackRock, Palantir, Microsoft, Google, all the old ones, Apple, the track and trace, the listening to you phones. That's corporate fascism plus Zionism, and they get what they want, the global Marxism, the new world order of absolute control.
Maybe we can now shift the conversation into the bigger story happening here, and that's really bringing us into a new monetary system. Right now, what we see with the stablecoin bill, and I do want your thoughts on the Genius Act as well, but it would seem that they're using this as a mechanism to engineer a new digital dollar and the demand for that digital dollar as well. Whether people realize it or not, it's not just about adopting crypto or innovation or all that nonsense. This is about replacing the infrastructure piece by piece with a new monetary framework that is built around the tokenization of assets. So overall, what do you think, how this is going to play out as far as the Stablecoin Genius Act bill? And what does it mean for the entire crypto space? There are people out here that say that's when we got our new monetary system again. And it's just nobody noticed it.
So brilliant question. And I have so many thoughts. I haven't, and I don't even bother reading these bills. I've made my mind up long ago. I just see them at the top level and see it as the advancement of the agenda that I've already assumed is coming. And that is tokenization of your assets. So eventually, I don't expect gold holders will just be able to self-vault or self-custody their own gold. They will say, hey, you all need to be with a registered vaulting service, and it must be updated on blockchain, what's there, and we'll ensure your safety and audit and insurance and all of this. They want all wealth, anything they consider of value, and many things that don't even consider of value, your secondhand bicycle even, with an NFT stroke token. And you've got to remember, tokenization is the insertion of a derivative proxy over your physical right of ownership on a physical item. And why would someone want to come and put a derivative proxy in between you and something you own? My motorcycle, my mountain bike, my gold holdings, my silver holdings, because they intend to fully send the clipboard around and find out exactly who owns what. And then they want to separate you from that which you own and put you into a rentier society. You know, it took a lot of businesses not that long to realize the Gillette's shaver model was give the handle for free and sell the subscription. Because it's a subscription, you have to keep buying the blades. You know, we should all go back to the cut your throat knives, get a nice Japanese spec once, and you've paid for all your shaving needs once off. Why are you agreed to a subscription for your shaving needs? Well, every business is doing that. And that's what we've learned. It's a rentier society they're wanting to inject, and they want to be the owner. Not that they will come and physically collect it. They just want you on a monthly premium for things you once bought and owned outright.
Own nothing and be happy.
Separation of assets. That is separation of you from your assets. Before I can separate Versan and Vandal from their assets, I need the clipboard to go around to find out what are their assets. Therefore, I need rules and regs as to why you must do this, why you must do that, anything valued over that. That's why bank expenditure and withdrawals are coming lower and lower and lower. So now you can't withdraw without telling them why you're buying. I mean, I want to be the guy in the counter that says I'm buying, you know, a harem of 6 blow-up dolls that I'm going to have a weekend of blow and a major party with to embarrass the lady behind the till. But it's actually got nothing to do with them. It's got absolutely sod all to do with any of them, and they shouldn't do it. But they are training you, and they're using the bank attack vector to say everything about you has become our business. There is no privacy, and that which you own and declaring it, otherwise you're a criminal and we suspect. You know?
Yeah.
So privacy is the greatest sacrificial element, and the reason that is that way is they are looking to disenfranchise you from everything. So
I agree.
eventually properties will be bought by buying the derivative token on the blockchain, and instantly there will be conveyancing documents that'll have title deeds. All of this will be captured. There's going to be a long period where all these servers will be collecting all the data. We'll all have to upload it. It's for your convenience. You don't have to worry about the paper going missing or your lawyer losing your deeds. We'll have it all here. Everything must be done. There'll be this big old project. It's going to be a massive data hoover up into the cloud, and then that's when it starts. Then they can start taxing you out of what you own. Oh, you own this? Well, we think, wealth tax. They're looking in the UK at different pricing on energy for wealthier people. This is hell-bent on a grand leveling, because wealthier people pay much higher taxes as well. They don't necessarily have disproportionately higher disposable income always. That you can be balance sheet fairly strong and income pretty poor. You've got $50 left. Some people live like that. But they are looking at that. They literally, and they do it to you on airlines, they do it on everything. So pricing and money, the minute you've given them the power, they're going to say, Versan, you're actually quite a capable man of that age. I didn't know you made that much. Actually, the liter of milk for you is $100. Because it's carbon, you have the means to pay. Yes, the tramp over there can have one for $10 or $12, but this is by the hollowing and the leveling, taxation, variable pricing. These are all tools. Unrealized capital gains, all these ideas that have been floated, they test the ground. You saw how Wokery was floated. This was BlackRock who didn't even own the shares. Your shares were bought, your unit trust, but you gave them their proxy votes. They went and fired good, solid board members to put woke, DEI, and everything like that, and started all these adverts. You gave them that power. You don't hate BlackRock enough. You don't hate Palantir enough. You don't hate the statists enough. You've got to take the profit that comes with it if it's going up, but don't be part of their trade it, invest in it for the upside. You've got to be pragmatic, is my view, but don't be part of giving them the income to do that or giving them the power to upturn boards. This is where we are. The goal, when you understand reset, the eventual goal is the Talmudic cult wants everybody out of their belongings and wants to own it and rent you and wants to have control like a god, whilst being the biggest atheist, wants to have control as to whether you live or not. And, we've got a boomer problem. It's an inverted pyramid. They all want to draw pensions now instead of throwing tax and supporting the debt system, because pension systems were the biggest supporter of the bond debt market. They were forced into it. That was deemed safe and austere and conservative investment to have for paying future pensions. Now there's not enough people paying in. There's too many drawing it out. And then you had the events of 2019, everyone locked up, put on ventilators and everything else that topped them. I mean, it's quite clear where they are trimming. And we are cattle. We are cattle to these people that rule. That think they rule and have the control, and you've got to do everything you can to survive and stay out of their claws, their deep reaching claws in this game.
But that's the idea. Like, the setup's pretty damn clear at this point. They're using all of this and they're selling it as decentralization. They're selling it as convenience. I mean, we have to debate this. Yeah, I can't even believe we have to debate this with certain people in here.
I can't believe it.
The forte behind crypto was to be decentralized. Now, the same people who sold that argument to everybody else are encouraging ETFs, Wall Street's involvement. This is a good thing. So they're inherently embracing their own slave system without realizing it. But we do see the opportunity because of the infrastructure, right? It's very clear. Again, if they can create demand for digital dollars with RLUSD, then the price of the XRP that sits underneath it, the infrastructure, will significantly have to climb as more liquidity and demand is needed, right?
But we have to take that money. We have to take it.
Of course,
because
right.
Too many normies are going to make it happen. We can't stop it. So we've got to take it. Didn't want to buy Apple and Google shares and all of that. They went up and became trillion market cap shares without my money. Maybe I should just take the money this time and try to discourage normies from making me rich, but just accept it, that it's going to go because they're winning. They are winning. It's a sad fact.
Yeah. So I do have a question for you then. As far as this opportunity to take money out, We do indeed, and we have enough information and evidence to confirm that XRP is becoming the infrastructure behind the scenes, while most of the world really just sees the front end layer of stablecoins and wallets, for instance. So, at what point do you think we're going to see the repricing of these assets become unavoidable? I mean, a very high price for XRP for the stablecoin narrative, where the value basically catches up with its utility.
So on XRP, we are the friends. You might recall we called $3.4 a localized high.
You guys were right
and
about
then
that.
it's traded right down to 1.6 for quite an extended period before the more recent run that we've had. And I think that was quite some time ago that we were together. But the overall macro chart, just to reassert, because there are many people that will see this interview and not have seen the original one we did when we spoke to you about it, about why we say $19.35 is a target. It won't necessarily be the last target, by the way, but it's a very hard target for us. It could happen this cycle. We're not asserting it has to, but I think there's a decent chance. And it's worth reminding, everybody's now drawn this draw, but not so many drew it before it happened. And that's where we differentiate ourselves. We highlighted that was a very good squeezy upside HVF, target made, another little wind up and a blow off move. That target was made, and then you made a blow off move. Then we spoke about this one and said this journey started. We called that the high 3 and the low 3. And when we put the draw tool on it for HVF method, which is unique to us, by the way, you can check out our YouTubes on both the Crypto Sniper or the Market Sniper if you're interested. Let's get that indicator on there. Well, no, not that one, the one above. There we go. I might just have to reload because I've got too many tabs open. It doesn't like that. Okay, that's why I did it. Okay, XRP USDT. So we're back on the time frame. Let's just go and show you that it should be log scale. And we preferred, that's T, it's Bitstamp, I think, that has the history I want. There we go. Okay, we're finally back where we were. Let's clean up and put that indicator on. So here's where the 19.35 comes. And if you like how the other targets performed, you should like this. So that was a breakout. That was your breakout candle. It was a beautiful candle. We were awaiting it. It was very low vol for a long time. In fact, you may remember we said to you, hey, we got a breakout coming for 19.35. Boy, did we have to eat horrible comments in the YouTube during this period. And we warned, we said it's called funneling. It's a churn of low volatility in a very tight range. You sat somewhere between 47 cents and 69 cents, and it went on and on and on for about 18 months. And people just don't have the patience. They say, no, you're wrong. Well, you told us XRP is going to 1935. Bang. Then it started here. It smashed its way up. Suddenly now it got back onto everybody's, we're at $3 now. You actually had a 340 high, which we'll go to on a lower time frame. But that target there is 19.35. And as I say, that target was made, if you had any doubts, and the subsequent windup was made with a bit of overperformance. So that doesn't mean we'd start taking off, but that doesn't mean it stops at 19.35. And then you set up again and you can go a lot higher still. So that's the joy. How many XRP do you have times it by $20? That's going to be exciting. Let me let you come back on that while I drop time frame.
Well, I was just going to say, to your point, when you said something about $9 and all the comments you're receiving, that there is sufficient evidence to support that the suppression of the XRP is indeed there.
It quite potentially, they want to let this dog out the bag, I would imagine, and there was the SEC case was an example in case that was, I'm not even sure if it's still over. That's sort of
it was resolved behind the scenes for sure. They're just kind of phasing it out. This is what they do.
Right? Yeah, it's become a bit of a nothing burger, like everything.
Exactly.
It's a problem for a while, and then eventually. So yeah, but bear in mind, if we get that demand destroying event, you can also still go down on crypto, as I was talking about total. There could be another dip, and I would say the 2 level is a great buying zone, but you've got to make sure you've got cash when everyone else hasn't got cash, and not
Dry
everybody
powder.
can say that.
And I have a question, Francis. There's a lot of people in the space that actually believe that because of institutional involvement, whether it's moving capital from retirement accounts, 401ks into crypto, or just institutional players and whales getting involved on a massive scale. There are some people that believe because of institutional involvement, it is going to remove bear markets from occurring this cycle. Basically, I believe the market dynamics have structurally changed to some extent, but not completely. Nothing goes up in a straight line, is what I'm trying to say. Do you think there is going to be a bear market still?
Of course. I mean, institutions are involved in equity markets. Do you have bear markets? Institutions are involved in gold, probably the primary dealer and central banks. Do we go up and do we go down? So 100% yes. You're absolutely right to be suspicious of that notion. I think it's a business cycle more than a 4-year cycle. It's stretching into that. So we could be longer cycled, and they are stretching that cycle right now with their liquidity provision, but rates staying high.
Rates staying high, yeah.
Nobody wants to buy the bonds at a higher price, paying a lower yield. So good luck cutting. The markets will just say no. Everyone thinks the Fed has ultimate power. Actually, they don't. Because if you can't place those bonds, no one's taking the other side of the trade. You need money to spend on operations. You need someone to buy an asset to give you money. If they say the asset's price is too high and there's too much and we're going into a financial repression era, which is exactly where we're going, and this thing's going to underperform, I want it cheaper and for more. And the faster people realize it and the faster people ask for much cheaper, higher yield, you're not really covering inflation. By the way, they've stopped measuring inflation by all the same puts reasons. They've cut right back on the inflationary points just at the time that tariffs have started. So this is the next warble. Of course, you think everybody, 25%, there's manufacturers that saying, no problem, we'll just drop our price by 25%. Some goods don't have that amount of margin on them. Some things aren't worth doing. If you're paying to do it, some market share isn't worth fighting for. If that's a permanent situation, good luck. Get them from the other guy. They didn't pay you $20 every item you buy. We aren't. We expect to be paid for delivery. So absolutely prices will go up. But the notion is it's all on everybody else's imported goods. So what has actually happened is Trump is taxing his own people on imported goods.
The same way he rug pulled them when he got in office.
Yeah. So that's
with the meme coins?
Yeah.
So
to your point, Francis, I mean, we're all long on the market, but we're not blind, and we're completely aware about the setup of any major correction here, because when corrections do hit, they hit all at once. So it's very possible we may see something, but have some dry powder to get in at cheaper entry points.
I think they're going to print trillions of dollars because there aren't enough bond buyers. And one of the reasons I think they are selling short-term bonds, U.S. debt, is because on the longer end, buyers, first of all, don't want U.S. debt because they don't have confidence in the U.S. repaying their own debt back. And second of all, why would they buy that and hold on to it for so long if they know it's just going to debase and lose value from constant crappy monetary policy and money printing, since we're in a debt-based system? So what I think is going to happen is they're going to print trillions of dollars to buy their own debt back. I think they're going to use stable coins to help assist with the treasury market and support it from collapsing. And the trillions of dollars will primarily be there funneled into the market. The big donors and politicians will get the bulk of it, move into risk on assets. And this is all really to prevent the bond market from a catastrophic collapse and keep yields stable until the reset fully manifests.
To his point, also, I want to share this with you, Francis. I mean, I wrote a piece on this on X and LinkedIn as far as the Genius Act, the stablecoin bill, and the Treasury Department's involvement. So they are indeed going to be using stablecoins to buy up Treasury debt, to digitize government spending, and settle trillions and trillions of tokenized assets. But to the point of XRP again, because stablecoins intersect with that there's no way in hell XRP could do this at $3. It'd have to be a lot higher.
Yeah. Yeah, I think your hypothesis is correct. And I think it will be a very profitable, and I think the bankers are already full with it because they've had a chance to test it, play with it. They were courted by XRP from the very beginning. It didn't pretend to be decentralized particularly or for the people. It said we're railway lines for the new financial system. So it was designed with them in mind. And that's why it will be a massive success. And they're already probably stuffed with holding it. You know, XRP, I remember giving quite a lot to Microsoft to come on board and do this and this.
Yes.
So all the stakeholders that have to be seen to win are already long and have big holdings. So they don't tend to miss. You know, Nancy Pelosi has outperformed Warren Buffett over the last 10 years. You know, that's called knowing which company's about to get government contracts for exorbitant amounts of money.
Exactly.
That's complete statism, it's complete corruption, and it furthers my point that there's a two-tier class system of absolute cacocracy and wealth for the ruling classes, where you'd have to be an idiot not to make money. I think that one
Yes,
blonde-haired woman in Parliament that used to talk about space lasers shooting up the California fires, she was a bit dangerous of mouth. She was fingering all the wrong people. Next thing you know, she's not talking like that anymore, but she's got a massive holding in Palantir just before they announce a mega contract, essentially. So, I mean, you know, they've all been bought off.
Yes,
you're very wise,
they're all
Francis.
thieves, and they're all stealing from you.
I mean, I
You're
love
right.
I love what you do, Francis, and you know we admire having you on, and we just admire everything you do. It's just your insights so real, and you see through the bullshit.
I'm not sure it's going to serve me. I'm on the wrong team, but I'm not interested in the winning team. I'm interested in a principled team, you know, of a real decency, common existence, some egalitarian and principle, and there's just nothing of it left.
So I mean, integrity.
There's no integrity in the systems of our world at all. They've been totally butchered, compromised, perverted, paid for, bought off, and unfortunately, you have to survive. You have to accept the environment you're in and find a way to keep your wealth up, because they are coming to level, particularly Western European citizens. They're coming to level your wealth to make you ward of state, UBI, all those things. You've got to be forced to take it. So the problem might be vast to get the reaction where everybody signs on the dotted line. And I fear that who knows what shape it will take, but it'll be very lengthy.
That's exactly what they want to do. That's what they mean by level the playing field.
Yes.
Yeah.
No, you know, you're gonna either be really rich or really poor. And either way, there are going to be certain conditions you must adhere to participate in the economic system. And that is digital IDs. That's what Palantir, Oracle, and the Trump administration are doing, Project Stargate. And that's when you start going down the rabbit hole about the digital grid that they're building. This is Patriot Act 2.0.
That's what you talk a lot about, Francis, as well. So, yeah. Make some.
I know you guys are busy, so let me wrap up. Enjoy the ride. Keep your spirits up. Don't get depressed by some of the things I say. Get enraged. Take action. Turn that rage into positive action. Turn it into spiritual pursuits. Turn it into living every moment of the day to the fullest. Love, live, swim, ride, do all the things. Nature is a creator. There is a creator. It's beautiful. Nature is magnificent. They're going to come to try tokenize nature so that even when you drink water, you have to pay them, which means they're going to assume ownership of that, by the way. That's something I didn't mention that I think they're going to try do. Everything they're going to tokenize, including territory, air, literally water and sea. But you've got to find a way to still have an amazing existence. Keep your spirits up. We've got a community called the Market Sniper. It's a private community. You can see how we intend to build our wealth by following our YouTube channels, the Crypto Sniper and the Market Sniper. And we'll keep you laughing and we'll cackle our way through this. We know the orchestrators, we know our level of strength, and we'll support each other. We'll inverse gaslight all the gaslighting that's going on. And if that sounds like something you want to be part of, we look forward to seeing you. So until next time, I salute you all.
Thank you, Francis.
Thank you so much,
and thanks to our audience. And please go support Francis Hunt's work. I'll put the links in the description below for both channels. Thank you very much.
Good speaking to you, Francis. Thank you so much.
Thanks for
See
having
you
me
soon,
on,
brother.
brother.
Always a pleasure.
Bye-bye.